And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Everybody who's traded has gone through periods of time where their strategy hasn't worked.
Where if not a hard stop, you should reevaluate the trades you're in based on time.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Happy Monday and welcome back to the Market Prep for April the 10th. My name is John Hoagland, as always. Thanks for trusting me with your time. I hope you had a nice weekend, a long weekend, Easter weekend, Passover, Ramadan, whatever you celebrate. I hope you had a peaceful and happy holiday and again, a nice long weekend. Got some rest in and got prepared for this week's opportunities in the markets. As always, my context in the market prep here is always about seeking accurate context in the markets, always thinking about risk management and remaining patient in our trading. This morning, 9 a.m., the preliminary wholesale inventories comes out. We also have 3:15 today. Fed member Williams is speaking. To take a look forward at what's going on with our economic numbers this week. Tomorrow, nothing all that impactful. The Small Business Optimism Index. We also have a couple of talking Feds through the day. Wednesday, the big day, the CPI number coming out. We also have Barkin speaking at 8:10 on Wednesday morning. We also have the the petroleum status report and the FOMC minutes all on Wednesday. Thursday, jobless claims, PPI final demand, nat gas report, and then Friday, retail sales, import-export prices, industrial production, business inventories, and the Michigan consumer sentiment. So we know we've got coming at us the major, of course, this morning, and that everybody is focusing on this week will be the CPI numbers. Sitting down here this morning, stock index futures were pretty much just dead steady. Now they've come off considerably since I sat down here at 6 o'clock this morning. So we're going to start the week lower with the equities and lots of focus on inflation, and of course waiting for those CPI numbers. PPI on Thursday. Friday's retail sales numbers, as well as the other numbers due out on Friday, will be joined by kind of the technical start of the earnings season with some of the bigger banks coming out on Friday. JP Morgan, Citigroup, Wells Fargo, PNC, BlackRock are going to be kicking off the festivities along with United Health. All of that on Friday prior to the open. Let's take a look. Yeah, all of those Friday prior to the open. So earnings season really beginning Friday morning. We do have some earnings coming out this week. Today we had Tilray, CarMax, Albertsons Tuesday. Nothing really looking that important on Wednesday. Thursday, Progressive in the morning. And then, of course, the official start of earnings season on Friday. So this week also, the IMF and World Bank are meeting in Washington this week. And, of course, their focus is going to be on inflation and banking security and whatever else they're going to be talking about. Crude prices remain stable this morning. On uncertain demands, a little bit lower now, it looks like, but uncertain demands meeting OPEC's production cuts, keeping price relatively close to where we were last week, pretty much range bound to the range from last week. So we're looking at the VIX this morning. VIX, the last I checked, was up about 8%, 1989. Was 1957 this time on Thursday. Remember, Friday was kind of a non-settlement day in a lot of these markets and a holiday. It's kind of a holiday. Easter Monday is a holiday in a lot of European countries, so you're probably going to be seeing some smaller volumes, maybe a little bit of less liquid markets today. The dollar up this morning, 102.52, where it was 101.90 on Thursday morning, and the yield on the 10-year lower this morning, but higher than it was on Thursday morning. 33.36% this morning, 3.28 this on Thursday morning. And always, we ask that you hit the lucky like button, share, comment, question, feedback, heckling, and love are always welcome here on the Market Prep and everything we do. Subscribe to our YouTube channel. It is Group Coaching Day. I've just put the link in so you can register for group coaching. And of course, at 2 o'clock after that, we'll have Make Hogue Money. Usual schedule this week, including the Coach's Playbook tomorrow at 11:30 and everything else as scheduled. So we are, looking for some interesting opportunities. Again, a lot of the focus early this week, will be on the CPI numbers. And a lot of folks will be positioning and hedging themselves for that release. Good morning to everybody. We've got Shaw first in the room, winning the prize this morning. Scott saw and he conquered. Will, good morning. Stephen, Rick, my brother, love you. Rooster, crowing early this morning. John, Theo, good to see you this morning. Theo, Terry King, Jason, JD. Yeah, no news till Wednesday. A storm is brewing. I'm hoping not, but you may be right there, JD. Dan Trader, good morning. Brian, Bill Phillips, ZK, Pete, Bear Goes Long, good morning. I got Lacey sitting on my feet as we speak. It's supposed to be a little warmer today. It's 46 outside right now, so I'm appreciating Lacey keeping my feet warm this morning, but it's going to be one of those days where we're going to be seeing, I think, some warmer prices. I'm looking forward to opening up the windows and having a nice breeze coming through here during the trading day today. Where were we? Bill, Zach, Pete, Bear Goes Long. There we go. JD, Sarah Hall, good morning. Prayers and love to you as well. White House Cap, Anissa, good morning. Andy, Robert, RCU, good morning to you. Rusty Golfer. It was some interesting opportunities to watch the Masters yesterday. Rusty Golfer, that was heck of a round there at the end. My guy, the guy I was hoping for, Hovland, Hovland, wasn't able to pull it out. DA Alejandro, Joe, good morning to you. Marcelo, Vince, good morning. Hope you had a nice Easter as well. Will the Barkin, the Merchant of Doom. Shy T, good morning. Travis, good morning. Julian, Hegel Matters, Trading Research. Keel, good morning. Naztic, Joe, good morning. Denise, good morning. John, Don, Papa, Chief, good morning. Family Office, bonjour. Adelson, good morning. Haven't seen you in a while, Adelson. It's good to see you. Thanks for popping in and saying good morning. JT, good morning to you. And Bluebell, Dan Trader. Oh, yes, with a rally sweater. That market needs it, right? That's why I'm wearing this today. Gunga Din, good morning. Harry G. Dimitar. Looks like I'm seeing a few names I haven't seen before. Welcome to the Market Prep. If this is your first time here, hopefully you're going to find some of this information highly useful. We try. Some days there's bigger, more obvious opportunities, I think, and some days it's we're going to have to wait and see, right? So that is the goal, though, is accurate context here. Wie ist das Wetter? Das Wetter ist schön. Yes, it is. Yes, it is. Going to be a nice day. You remember that, huh? That's funny. Jason-ish. Yeah, and again, if this is your first trip to the Market Prep, hopefully you're going to find something useful. Thank you for popping in, saying hello, and of course, always appreciate the likes and joining the Top Step YouTube subscription. And we're going to jump into the charts here. As always, we start with the daily and the S&Ps. S&Ps, the equities now, the S&P is down about 0.5%. And off the overnight highs. Remember, Friday was a holiday, so we've got kind of 3 days of the market to digest information that may have happened between now and then. As traders come into the market this morning, they are looking like they are in a little bit of a sour mood. And we're going to take a look. Here's the S&Ps. Now, really, we're still somewhat in an area of balance, we've established and been in for about 5 days. What we're seeing here in this area of balance was, if you remember, what day was this? This was last Monday. Last Monday, the continuation of the rally was less likely because we saw a pretty good drop in open interest and volume was pretty low on a continuation to the upside. Well, we said, this auction is beginning to tire. It needs to either consolidate to even up inventories, or it needs a pullback. So far, it's done a pretty good job of just consolidating to even out inventories. You're getting pretty close to the low end of that area of consolidation. And we are, of course, expecting markets and traders and investors to adjust inventories to protect themselves about anything that happens on Wednesday with the CPI. So we're looking at balance to breakout rules. And the extremes of balance, we're going to buy low and sell high. Upon acceptance outside of balance, we're going to go with any moves that are created. So last week's high and last week's low are really the kind of extremes of the week and the area of balance that we're currently in. Anything in the middle, I'm going to be patient and wait for opportunities to establish themselves in daytime frame structure and then look for my opportunities. So here's the 30-minute chart. Here's Thursday's rally off the lower area of balance. We failed to hold below the previous day's low. Buyers came in and moved us higher. Here's the overnight. This was actually the unemployment number on Friday. It wasn't regular trading hours, so I'm not giving it any kind of a profile. We opened here. We opened up here. Where is it? We opened here. We're now trading here. We have some overnight inventory that is pretty short, especially in the last couple of hours here. Remember, sitting down here at 6 o'clock, the market was looking a little bit different than it is now. It's one time framing lower. We don't want to catch a falling knife unless there's a longer time frame reference. That longer time frame reference may come in near last week's low. We were kind of looking at the idea that this might end up being a bull flag. We tried to get down to it on Thursday. We were unable to, so the buyers came in. I don't see anything in the news that is creating this move. It's probably just inventory adjustment still. As we are, again, waiting for CPI, you're going to see more adjustment in inventory and more positioning to protect themselves. So this is the 30. Overnight inventory is short. We're not going to be opening with a gap with a relatively high degree of probability. So I'm going to try and stay patient, especially if we open in range and in value. There is the possibility for repair. What is repair? Well, we've got a double distribution trend day in the profile. And when we open between the distribution areas, there's a tendency for the market to trade to both assumed points of control in the areas of balance. In the double distribution trend day. So here's what it looks like. Here's the double distribution trend day. We've got a distribution of time and volume here. Price leaves that area seeking higher pricing where it accepts over time here. The market is currently trading basically at an assumed point of control for this lower distribution. If it opens between those two areas of distribution, like if it were to open here, I would say there was a pretty much a higher probability of repair to both assumed points of control. Now we've got a TPO point of control that's up here. We've got a volume point of control that's down here. If we accept between them, there's a good probability of reaching both. But again, we've got to be able to open or at least reaccept price between those two levels for that to be true. Friday's initial balance was the low of the regular trading hours session. Double distribution trend day to the upside, kind of mixed information with volume lower and time higher, which kind of leads me to believe we're more likely to see repair today. If we get back inside and accept above this point of control at all today, I see a pretty good probability of moving back to the upper point of control, which is the TPO point of control of the overall profile. It's going to be an interesting and I think challenging day. Don't forget that there's a lot of holidays overseas for Monday, Easter Monday. A lot of traders will be taking time off overseas, so you're likely to see naturally lower volume and a little bit of less liquidity. What about crude oil? Crude oil. Didn't get my wish. My wish would have been to have an opening gap lower, a weekend gap lower, which would leave this as an island top and be a pretty strong rejection level of higher pricing, but it doesn't look like we're going to see that. The market is in balance. It seems to be relatively correctly priced. We've got, OPEC's producing less, but questions as to how much demand there's actually going to be. We've got a weekly kickoff level down here at 79.60, and it looks like we're getting a good test of that. Pretty much the lower end of this area of balance. What do we do on Thursday as far as open interest? On Thursday, we added 9,400 in open interest. So there is energy coming into this market. Take a look at the 30-minute chart here. So again, the market heading lower here prior to the open. We've just opened. We've got a pretty decent range already for the session. This area down here is the area that we're looking at the lower area of the lower extreme of the area of balance that we're in. Now, I've got the composite profile on here because this is kind of capsulated information. There's nothing behind here for us to really focus on until we get a little bit further back. So what I'm looking at is how is the auction, the two-sided auction, doing here? It seems to be doing pretty well. If you look at this profile, volume profile, which includes from last Sunday night to now, it's getting pretty even. And when this bell curve gets even, this market is going to be pretty much have used up its ability to facilitate trade. The market's job is to facilitate trade. If it doesn't do a good job of facilitating trade at these prices, it's going to seek other prices to facilitate trade. Look at the overnight high here. This is all the way up here, but where did we find some resistance here? We found resistance above the value area for this entire time. We've found support below the value area for this entire time. So we are going to be trading, or we did open outside of range and value. We've come back into range from Thursday. If we can back into value from Thursday, a move to the upper extreme of the value area from Thursday is likely. Is it worth the risk? Here's the low of value, 80.34. Here's the high of value, 80.65. A 30-point value area. Is it worth getting chopped up trying to catch the value area special situation play here? I'm thinking not. It looks like we've got our, I want to see this. Whoops. It looks like we've got our opening range at the low of the session here. Yes, we do. Opening range, the low of the session. I'm looking for opportunities for longs until that proves wrong. Opening range is rather large, which would make it a little bit inhibitive, but it looks like we may finish the value area special situation play before we even get the chance to get in. So now we're just going to wait until the extremes of the day are formed and probably focus on those extremes. Here's the TPO chart. This includes the overnight. Here's Friday's value. IB low, IB high. It's a normal trading day. That's on Thursday. Opening, leaving the opening range at the low, right back into value, right back into value, right back into value. This market is really in balance. After that big move last weekend, it's really just priced itself, it appears to be correctly. All right, so here's the NASDAQ. So the S&Ps, I think, are doing a better job of staying in balance. The NASDAQ has seen more of a pullback than balance. I would say we're in balance day number 3. We're in day number 5 in the S&Ps. We are seeing inventory adjustment in this area of balance, but the two-sided auction grade that I give the S&Ps is more of an A. This is more of a B, where a two-sided trade is being accepted as price. Over last week's low and high also are looking like they're going to be relatively important levels for us this week. And all of that can go right out the window during CPI. So here's the 30-minute chart. We lost about 1,000 in open interest on Thursday. A little bit of possible short covering while the longer time frame is adjusting inventory. We have overnight inventory to the short side, but in range and in value. The NASDAQ is looking more like a possible day of repair than the S&Ps. Take a look at the TPO chart here. Okay, so here's the double distribution trend day from the NASDAQ from Thursday. It looks like we're going to open like above this high volume node here, below this this high volume node here. If we do, that's going to increase the probability of trading to both at some point in the session today. So if we do open right here in the middle, stay patient. You're in value. There's very little change to the perception of value, and focus on the extremes of a potential repair day. A lot of folks say, well, what does repair mean? Well, on the double distribution trend day we put in on Friday, there was an area of balance here. There's an area of balance here. Inside here, there's no balance. There's very little participation. The market, when it opens here, has a tendency to trade to the participation level in the higher distribution and the participation level in the lower distribution, seeking new information. And keep that in mind. Here's gold. So gold, upside structure remains. Reading in the weekly kickoff this morning in Futures Magazine, looks like gold has been a favorite of China. China's been on a gold buying spree. The last 5 months, they've added 120 tons to its reserves. They're seeking credibility for the yuan. It's getting a little bit of a pullback here this afternoon or this morning. We did break out, and this was a pretty considerable breakout, but we never did bring the momentum to the upside. A lot of speculation is, are we going to be able to take out the all-time high, which is right up around 2088, 2090? Well, we're getting a pullback here this morning. maybe a lot of folks jumping in too early on long positions, but it does appear to me that we're starting to form a bull flag here. Here's the upside. Here's the upside. Potential for a bull flag. If volume gets cut off or open interest gets lower as we continue to try and push this market lower, this may end up being a bull flag, and a breakout above this trend line might be something very tasty for us. We already have 1, 2, 3 points of contact on this trend line. So if this is going to be the upper line for our bull flag, a breakout and acceptance above could bring a powerful move to the upside. 2060, our weekly kickoff high. 2088, I think, is the all-time high. 2090 up there somewhere. So I'm going to be kind of cautious until I see an opportunity of this caliber, which could happen anytime, right? So we have to get 3 points of contact on this trend line. This, I'm not sure where this comes from. I'm going to take this off. But if we were to, put a trend line here, that could give us our channel to create a bull flag. So the dollar's strong today. You got to keep an eye on the dollar. Take a look at the TPO chart here. So Thursday, I should say, some considerable excess. An attempt to close the open point of controls from Wednesday. Today, gap close, considerable push to the downside. Again, if the volume is cut off on this move to the downside, if we lose open interest, which Friday, of course, we had no open interest. There was no change in open interest on Thursday. So it kind of telling us, when we look at the volume here, lower, no open interest change. If we have lower volume and a drop in open interest here, I think it increases the likelihood of a breakout to the upside above this bear flag. Here's the TPO chart again. Excess, low excess, but excess nonetheless. Continuation. This move to the upside in gold, I want to point something out, has been relatively organized. Point of control checked. Points of control checked. Point of control checked. Point of control unchecked, above. Now, there are unchecked points of control down below also. But overall, in the most recent move to the upside, the market has been relatively organized because it's checked all the points of control and now is leaving naked points of control above the market. And the euro. So yeah, with the dollar doing well here this morning. It's up 0.5% right now from what I'm seeing. We're seeing a nice pullback, but I think the upside structure remains here. We are starting to see volume slow off a little bit on those highs. We lost 10,000. We lost 1,000 in open interest, so the upside auction is suffering a little bit. I'm giving it, because it still holds upside structure, a B minor. A B minor. We're getting pretty close to a potential change here. Here's the 30-minute chart. All right, and here's our potential change. We got a little bit of a channel here. 1, 2, 3 points of contact. We're now showing acceptance below it. We've got lots of things to look at, lots of visuals below for this market to come back and retest. And I think that's a pretty good probability now, as long as the dollar remains strong. Here's the TPO chart. You're going to see a lot of those visuals to revisit down below. Look at this. This is a mess. Got a couple above as well, but our excess on the profile this morning is on the upside. We've got the IB high, IB low On Thursday was the low. Normal trading day, week high. I mean, there are arguments for the euro to go either direction here. 100% in every market, that's true. It's difficult to determine for me today what are the nuances that are most important. What is the ruling reason I would take a trade in the euro today? And it's a very unclear ruling reason. Here's the 10-year. Upside structure again remains. We're seeing a 71% probability of a rate hike of 25% in Fed funds the beginning of May. Medium time frame structure is still to the upside. Take a look at the 30-minute chart here. Little disorganization on the way up here. We've really kind of kept our weekly kickoff high relatively tight. 16, 19. It's only moved up 10 ticks. Because I still think that there's plenty of resistance up there. We've got a gap that we closed, points of control that we've closed. We've got more visuals below than above. So opening in range and in value, we've rejected that. I'm looking for this market to probably continue this move to the downside for the time being, as long as we don't re-accept inside range from Thursday. Here's the TPO chart. These are difficult to read. Excess, low excess, low excess, low excess, low excess. Market looks too expensive up here, doesn't it? Excess high, excess high, excess high, excess high. Looking for this market to continue to move lower. Of course, we got to watch rates and see what happens on Wednesday. Here's the TPO chart. Well, that is the TPO chart. My bad. I'm a little slow on Mondays. Take a look at the natural gas. So Thursday, well, Friday there was, of course, no change in open interest. I don't have Thursday's open interest. Yes, I do. So Thursday we added 1,000 in open interest on the way down. But it looks like we may be putting in yet another bullish pattern here. This could be a bullish engulfing pattern here. Look at the 30. Wow, look at this thing go. We kind of showed a degree of acceptance in the close on Thursday below the value, the balance area. We're rejecting it. Why did that happen? How could we have seen that? If I traded natural gas, I probably would have been looking for an opportunity for a long today because we left a late spike. Okay, we have a double distribution trend day with a late spike at the end of the day. The overnight low is settlement. We've rejected the late spike. We've opened above it. That tells me that this is too cheap. The market is rejecting lower pricing. Now may be the time to look for longs. A little late to the party now, and I don't trade this market because it's vicious. Good morning, Tom. Because it's vicious. Vicious. So we do have a whole week ahead of us. I'm going to be cautious today on Fridays because, as most of you know, Mondays are not my best trading days. I think I said Friday, but Mondays are usually not my best trading days. So I'm going to stay patient. I'm going to let the market come to me and say, hey, here's your opportunity. If I go looking for opportunities, I know I can find them, but probably not the ones I'm going to be happy about. So let's take our deep breath. Stay humble, grateful, creative, and centered in your trading today. Looking forward to seeing everybody for group coaching, Make Hogue Money, and at the end of the day for the reflection. And trade well. Trade for tomorrow. Make sure you manage your risk well. If things don't go well, you start getting emotional. Make sure you step away and let go of some of that venom. That venom isn't going to help you make better trading decisions, that's for sure. And I will see you later on today. Have a great morning. If I don't see you later, have a great day.